remain, but just turning our attention to gold and silver prices because they've rebounded after the massive fall over the last week. Manisha joins in with the details.
Well, thank you so much for that. Yes, 2 days have been a massive decline that we've seen gold and silver, both of those commodities. The sell-off came in because of the margin hikes, the speculative unwinding, and also because of the easing geopolitics. So whether it has been about US and Iran or even US and India trade tariffs for that matter have led to some ease in the international markets therein. But when you look at the markets today, well, gold is trading 5% on the higher side. Silver is trading 10% on the higher side. It continues to be very, very volatile. So even as we are back at around $4,900 an ounce for gold, markets do believe that some profit taking is still remaining, and $4,400 to $4,500 an ounce is a very strong support on the lower side. For silver as well, while we have been looking at that $70 to $85 an ounce of a range in last 24 hours, a lot of experts tell me that $65 an ounce perhaps is a level that silver prices can go up to on the lower side. So volatility in the near term is something that is not ruled out. As of now, we've seen a bounce because the structural strong support numbers have kind of held on. And then there is no changes really in the long-term fundamentals. If you look at the year-end targets for gold and silver from most banks and brokerages, they believe that even higher highs is where you could be looking at by the time this year ends. The other reason that the buying has come back into the market is because the narrative about this partial US government shutdown is still on, and is the reason you wouldn't be looking at labor data. The US non-farm payroll data will also not come into this week. So some of these concerns are yet again supporting gold and silver prices. And then, of course, the kind of sell-off that we saw in the last 2 days, this is a bit of a bounce back that we're looking at in the day.
Okay, all right. Thanks a lot for that, Manisha. Well, let's